All right, what's going on, everybody? Welcome to another back testing session. So we're going to actually do it on NAS100, and it is it is November 22nd, 2021, around 5 p.m. Now, this is a trade that I took early this morning, so I'm going to show you exactly what I did and exactly what I profited. So let me actually go into my phone and pull up my profits in my phone because I'm going to share my phone screen at the end so you guys can see it. So give me a second here. All right, I got it. So now, very first thing I did was I actually marked up market structure from the 15-minute to the 4-hour time frame. Okay, so I'm going to actually start that process. So let me scroll all the way to the beginning. So let me pause this recording until I get there. Be right back. All right, so we're right at the beginning. So I'm going to go ahead and start marking up a market structure. So let me take my vertical line and put that here. And then I'm going to mark up market structure just based off of institutional levels, okay? So I'm going to make the horizontal line yellow. Institutional level here. One right here. We got one right up in here. And then I got another one right up in this area here. It's kind of like right here. All right. So now what I'm going to do is just start marking up supply demand zones off of these horizontal lines. So I'm going to use the yellow, light yellow one. Do this one here. All right. So that's why I got it marked up. So I'm going to change the coordinates of these zones and then we'll move on to the 30-minute. Be right back. All right, so as you can see, we marked up everything on the 15 minutes. So now we're going to go to the 30-minute here. So let's do that. All the way back. Whoops. So now we're going to start up in here. Vertical line, put that here. Put that right here. Put that up here. Right here. Right here. Let's see. It's kind of like up here. Last one up here. So now I'm going to mark up supply demand zones off of these. So we're going to make these clear and green. Actually, I'm going to move this over to here. Yeah, that's better. So then the other one's going to be here. Next one will go up to here. So now we're going to change the coordinates to these zones and then we'll move on to the 1 hour. Be right back. All right, so now we marked up our zones on the 30 minutes. So now we're going to go into the 1 hour here. All right, so now we marked it up all the way to this point. So we got to mark up to here. So let me take vertical line. Right. With this and imbalance institutional move there. So we're going to make this red. This was a blue one here. Right here. Then right here. So then we're going to mark those supply demand zones here. All right. So now I'm going to go ahead and change the coordinates to these, and then we'll move on to the 4 hour. Be right back. All right, so we marked up everything on the 1 hour. So let's switch over to the 4 hour. All right, so we got everything marked up. You can see it. So now we're going to actually go to here. And so now, as you can see, price is pretty much overbought here. And it looks like it's at that point up here. You can see it on the RSI. So then it's probably clear to actually put horizontal line here and then draw a supply zone here. Make it very thin. Draw another one right here. Maybe even one, possibly, maybe even one right here. And then I want to change the coordinates to this. Right, and then do the same thing here. Maybe another one right up here. And we'll see how it looks on the 15-minute, but it should line up just about as perfect as possible. All right, so we marked up everything on the 4 hours. So let's go to the 15 minutes, see where we're at. All right, so yeah, perfect. So we lined everything up perfectly. Yep, right here, then down here. So now that we taken care of step 1, which is marking up market structure and supply demand zones from the 15-minute to the 4 hour. So now our job now is to actually figure out what is the overall trend and what is the current trend. So we can see here that price did an overall uptrend here. Okay. So you can see institutional move here. They pull back, institutional move all the way up to here. Kind of a lot of a consolidation that started kind of here. All right. Then a little bit of an up move. And then now you got consolidation. Right. So price was trending upward, then it started consolidating. So at current price, I see that price is consolidating. So when I see prices consolidating instead of doing a normal retest on an uptrend or a downtrend, then my mindset is that I'm not going to trade anything until price breaks out on either direction. Okay. So why does this go? Okay. So the next thing I do is I turn on my higher high and lower low strategy because I just identified the trend. And so what I like to do is I like to actually put my supply demand zones. I like to place horizontal lines on the most recent high, the most recent low using this indicator. And these are identified as my supply and demand breakout zones. So that way I can determine which way price is going to go, whether it's going to buy or sell off of a break and retest. And then that's going to help me to alter my decision on whether I'm going to buy or sell. So that's what I do next. So I'm going to save this. Then I'm going to turn this off. And so now what I have done is I've identified the trend. So then the next thing I want to do is locate imbalances in the market using my order block, institutional order block indicator or flow tracker. Okay. So then when I look at the current price, and then when I look at the most recent trend, price created an inefficiency in price here, pretty much all the way up here, even though price kind of consolidated. Now, imbalances in the market is created when the banks put in buys or sells, and it makes price go up really, really quick to where it leaves other buy or sell orders open. So as you can see, this imbalance created an imbalance here, created an imbalance here and here. And that's the reason why price kind of came back and mitigated 50% this area and then bought up, kind of mitigated this area and then kind of bought it up. But this move created an imbalance as well. So then my thought process was, okay, they're probably, it's a possibility they might mitigate this area and then immediately buy it up. Or they might just decide to, let me pull this down, they might just go ahead and actually buy price up and create an all-time high so they can create a lot of momentum to sell price and fill all these imbalances eventually, okay? So what I'm going to do is actually move this zone up to represent this liquidity that price picked up before it decided to buy up and create all these imbalances. So the next thing we're going to do is I want to actually go to step 5, and that's when we're going to actually plan on our trades. Now, before I do that, I'm going to take the horizontal lines and mark up the imbalances because these are going to be our take profit zones, okay? Then imbalances here, okay? So then when I plan my trades, okay, basically what I do is I take the risk to reward tools, and if price decides to sell, then I basically set my take profit zones. So this is going to be my first take profit here if price sells. And that's going to be my first take profit. And I probably would make this my second take profit if price even goes that low. Okay. Might even maybe bring it down here because eventually they're going to have to medicate this area. But my primary goal is to get at least 200 pips in NAS. Okay. And so then I have this set so that way if price sells, I can easily put in my stop loss and take profit. And then if I decide to do a pending order, I could put in my entry price as well. Now, then I take my other risk to reward tool for the long position, and if price buys up, I'll be prepared as well to put in my stop loss, take profit, and entry price if I decide to do a pending order. So then this is pretty much going to be entry, stop loss here. Want to get at least 200 pips in NAS. So from here all the way up to here, this is definitely 200 pips here. Right. And this is where I would set my take profit here. And then if I wanted to hit a second take profit of 500, I can just put another take profit here. Now, when I bring this down, I'm actually going to erase this zone and just redraw it so it can be so it can represent our supply zone. So I want to kind of just draw it to here, just make it a little bit thinner. So really in reality, yeah, I'll just put this horizontal line. Really in reality, I probably put my second take profit even up here, 1,000 pips plus, and then just raise this up to here. And then the next thing I would do is just set my take profit alarms, and then be good to go with the take profits. Now, then I basically go to step 6 and I'll execute my trade based off of the extra confirmation off of the Delorean EMA indicator. The way it works is I use this indicator as a way of extra confirmation on top of everything else. Basically, when the yellow EMA crosses the red EMA, 9 times out of 10, it signifies a very strong trend or a strong candle that you can scalp. Okay. So if the yellow EMA crosses the red EMA and it lines up with all my other confirmation with the imbalances in the market that I've analyzed, my market structure, and just everything else, if it lines up all my rules, then that's going to determine whether I'm going to buy or sell. Okay. So now what we're going to do is we're going to actually just play the replay tool and see how price played out. Okay. So it looked like price was starting to buy up. Then it started to push up. And then ultimately it pushed up, and you could see that the yellow EMA was sticking out. I didn't buy in yet because I didn't want to get faked out. Now price started pulling down because it came down and mitigated 50% of this imbalance here. So that's what it did. Then price instantly started buying up here. And when it pushed here, I put in my stop loss and take profit, but I put it in wrong. So I kind of missed my entry and I was a little upset about that. But I ended up, but price ended up smashing my first take profit, which is good. But by the time I got into the trade and smashed my first take profit, I was in drawdown because I got in too late. But it's okay. I was being better safe than sorry. But price ultimately smashed my first take profit. And then it pushed up even further. And by then, when price pushed up, then I profited about $20 on the lowest lot size position on NAS. And then price pushed up and smashed my second take profit, but I was already out the trade then. All right. And then it created an all-time high. And then all of a sudden, that's when price reversed because it was officially overbought. Okay. Now I'm going to show you my profits in my phone, and then I'm going to also show you what price did later on. So let me share this real quick and then we'll wrap it up. All right. So as you can see, I basically caught most of this and got in. Price went all the way up to here, and that's when I made my $20. And this is on the smallest lot size position. So that's decent for a small lot size on NAS. And then that's when price started reversing. So now we'll go back to the chart here. And so you can see that's how it happened. Now price ended up doing something, ended up coming all the way back down and filling these imbalances, which basically confirmed what I was thinking before. So I'm going to show you guys that. So price came down, started pushing down because this is a huge imbalance that they had to fill. So I'm going to mark this here. This is an imbalance. This is an imbalance here. So let me save this, then we'll wrap it up. So price pushed down, and look what it did. And then it really crossed. So I could have got in on another position and sold here. So if I was going to sell again, then I probably would have just adjusted my stop loss up to here, probably my entry right here, maybe even right here because it officially crossed. And I would have smashed an additional, let's say if I jumped in here, that would have been definitely another bag. Okay. But let's see how how far price went. Smashed my first, I think was this first take. Yeah, my first take profit on the sell that I set before, and it's still dropping because look, they had to medicate all this area, but let's see how far it went. So let's bring it down. Dropped. See how they had to medicate all this imbalance that it created. They had to. So that was definitely a bag there. And then price pulled back because they had to medicate some of that area. So at this point, price came back down to this area, which would have been a huge bag. If I had jumped in from here, went all the way down to there, even on a small slot size, that might have been $500. Just taking a wild guess. But now it looks like price is reversing because price was oversold, so they might come back and mitigate this area. And then or at least 50% of this area, and then they might drop it even further. Yep, dropped it. And this was an additional, if I had with it for another entry, that was an additional 1700 pips. And then they did that to mitigate this area once again. And so it just proves that what I was correct about my analysis, that they eventually was going to have to fill this up. But they create an all-time high to create all this momentum to drive price all the way down to mitigate all this area so they could fill those imbalances, because a lot of sell orders were left open from this imbalance move from here all the way down to here. We're really from here all the way up to here. All right. So that's how the market went, and that's how I made my money on the uptrend. So that's pretty much it. I'll see you in the next backtesting session. Take care.